Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm a managing partner at 40 Capital. Today is Monday, July 14th, 2025. And what we do is we specialize in a very unique mathematical approach to the stock market where we analyze and calculate the market and individual stock in three-dimensional space. And by doing so, we can very often very accurately project both the time and the price variable of upcoming turning points. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies. So what I wanted to do today is I wanted to record the video because we've just achieved a number of significant mathematical and programming breakthroughs that essentially allow us to analyze the entire S&P 500 in both time and price, and it allows us to pick out stocks that will make significant moves going forward. It allows us to identify upcoming turning points with great precision as well as subsequent moves. I'm not aware of anybody else being able to do that, so what I wanted to do today is I want to record a video to showcase our work, show our software, show what it analyzes, and I believe personally you're going to be very, very impressed with what you see. So without further ado, let me just very quickly go over our work and how its application to the stock market. If you need additional information, I'll send it to you, but you can see the link here. There's quite a bit of it there where you can run the same calculations, verify our numbers, and prove to yourself that what I'm telling you here does indeed work. So basically, think of the following very quickly. So think you're looking down the tunnel and you see a snake moving along the wall of the tunnel, either away from you or towards you, doesn't really matter. Well, if you put that image perpendicular to your face, all you're going to see is up and down movements, as you see here in torus kind of a structure. So it's one and the same, just different perspective. Well, essentially the same thing is happening in the stock market. What we see on the two-dimensional time and price chart is a shadow representation of the move, not the move itself. The actual move happens in three-dimensional and sometimes in four-dimensional space. So what does that mean, or how do we calculate it? Well, it's actually very easy. We calculate it with high school geometry. Pythagorean theorem, which is a square root of price squared plus time squared, gives us a singular value. And when we begin to calculate the overall stock market, or once again individual stocks, whatever time frame you can imagine, we essentially begin to see very similar or identical moves over and over and over again. And if you understand that, if you understand how to put it all together, you can essentially predict exactly what the stock market is going to do going forward, once again in both time and price. So for example, this is a long-term picture of the Dow from 94 bottom, which was a very important bottom, to 2016. As you can see, these bull and bear phases, when you add them all together, end up being exactly 18,300 plus or minus a little bit of variance. So perfect moves. So if you understand once again how to put it together, for example, you can here at the 2007 top, if you know that the value is 800, 300, you know the extent of the move down, what it's going to be in three-dimensional space, and by using various timing variables, you can then ascertain exactly where that bottom is going to be, how far down the Dow is going to go, and so on and so forth. So I'll take screenshots of these values. You can once again calculate it for yourself to make sure what I'm telling you here is indeed correct. This is yet another long-term representation of the Dow Jones. As you can see, the values are exactly the same, 4,638 from bottom to bottom, top to bottom, 24,761, 24,12, 12, 21,900, 10,460, 10,800, 14,800, which is essentially a square root of 10,460. So basically, you will see the same numbers over and over and over again, or you'll see the derivatives, which is square root of 2, square root of 3, square root of 5, 2x, and so on and so forth. And this, what we're seeing here, is a long-term representation of the work. But we can zoom in on daily, intraday charts, and we just have to adjust the math a little bit, but you'll see the same output. happening over and over and over again. And once again, when you understand how to put it all together, you're going to be able to make exact projection going forward. And then we have timing variables. I don't really want to spend too much time on describing this because I don't want this video to be very long, but basically we have proprietary cycles that we've discovered over the, many years that we can let our software know to scan back and then forward them, project them forward, and then we know exactly when the upcoming turning point comes. And this has also to do with a variable of the Hurst cycles that predicts both the bottom and the tops. There are multiples of them running at any given time for any given market or individual stocks. For example, two bottom formations and then two top formations is very typical at the very least. And if you understand how to put it together with all of these variables, then you can make very accurate time and price projections. I'll get back to that once we're going to be looking at actual individual stocks, but from this particular perspective, that's how it works. Okay, so now let's go back to this, or not go back, but let me show you the software and how it works. Okay, so I know the name is kind of not very good, but it is what it is. So we call it super equities, and from setting parameters perspective, it's very easy. So if we click on parameters, we giving software only two inputs. Okay, we're giving it a time until, or we're giving him a date. So for in this particular case, January 1st of 2026. So we want the move in the overall stock to start before that date. And in this particular case, we're looking for a move that is 50% or more. We can set it to whatever we want, 25% or more, 100% or more, etc. So the move will start. So when we, for example, scanning the entire S&P, the move will start before January 1st, 2026, and the subsequent move in an underlying stock will be 50% or more, whether it's on the short side or the long side, doesn't really matter. And we simply click apply, and then we load up the entire S&P 500. Now, I'm not going to do that because it takes the software at least a couple hours to scan the entire S&P 500. Let's go back there to the software. But that's basically how it works. We click compute and it begins the analysis process. And let me show you what it's looking for, because this is very important, okay? So let's assume, the variable number one that is looking for is right here. It is looking for very clear upcoming time and price turning point. In this particular example, it is looking for a bottom. Okay, we can be looking for the top in the very same fashion. So in this example, it is looking for a bottom. And when I say it is looking for a very clear upcoming turning point or bottom in this case, I mean that at any given time, various stocks will have very clear upcoming turning points based on our mathematical approach, and sometimes they will not. And that, of course, changes as the time changes and the structure of their underlying equity changes. The variable number two it is looking for is a small margin of error associated with this upcoming turning point. This is one of the keys here, is because, you know, typically we want the margin of error 1 to 3%, meaning that if the individual stock breaks below this margin, it invalidates our analysis, and then we can get out with a small loss, of course. But the bread and butter of it is able to project the subsequent move in the opposite direction. So in this case, higher. Okay, so the software has identified this particular turning point. It identified that it has a small margin of error associated with it, and then it projected that it will increase. The move will start before the end of the year, and it will increase at least 50% or higher during this period of time. And I want you to think how amazing this is. Our software already has the ability to calculate all of this. Okay, it is able to calculate the upcoming turning points. It is then able, from that upcoming turning point, to project what the future movement is going to be in both time and price, and on multiple time frames. And then it picks out only the best opportunity, only the opportunities that are most risk averse, and in line with this 1 to 3% margin of error associated with it. Okay, so Let me just show you the results that we're getting. I'm blown away. I actually have more opportunities than I know what to do with at this point in time. So early in the week I scanned just the half of S&P 500, and this is the output I got. So let me show you the list. So this is let me move this here. I'm not sure if you can see it on your screen, but it's kind of in the way. Feel free to take a screenshot of all of this. These are the opportunities that our software has identified. So out of 250 stocks, it picked out approximately 57. The white ones are short opportunities that are coming up in the market. We typically try to shy away from them because, as you know, it's a lot more difficult to short. Just pay attention to this one, NASDAQ in particular. It is projecting a major cycle top. Very soon, or as we speak. The price projection we disagree with a little bit, but nevertheless it's something to pay attention to if you try to analyze the entire market. So the green ones are the long opportunities. The light ones, basically it is moving out of a mid-cycle bottom and then increasing into the top, and the dark green ones are the major cycle bottoms, which are very important bottoms, and then it's coming out of those. So we typically like to concentrate on the dark green ones because the opportunity for profit there is quite more substantial than otherwise. So, but this is only the step one. Let me mention very clearly. Not all of these stocks will work out just as our software projects. Okay, we actually have to take a hands-on approach, and we have to analyze every single one of them and then determine whether or not our software is correct. And I'm pleased to say that in 60 to 70% of the cases it is. Okay, so the rest, some of them we have to dismiss, but in 60 to 70% of the cases what we're looking at are very good opportunities that are expected to bottom in this particular case, and then expected to increase quite substantially. So let me show you what that means on an analytical perspective. So once again, this is the output, and then we take a look on individual basis in order to confirm what our system is indeed telling us. But once again, I'm unaware of anything else that is able to do that because, as you know, whether you're using technical analysis or fundamental analysis, none of those tools will give you an exact time and price parameter for the upcoming bottom in this particular case as we look at these green equities. So I want to look at two stocks, and I'll explain them in greater detail so you'll understand a little bit better. So for example, I don't think it's on the list because it's already passed and actually was triggered, is Bed Bath and Beyond. I'm sorry, not Bed Bath and Beyond. No, it's not Bed Bath and Beyond. It is BBVI, which we actually took a position in, and it is a retail. Let me pull up the software output here, and I think it's right here. Yeah. So BBVI we're looking at. And this is the output the software generates when we look at on an individual stock or individual case for any particular stock. And so these kind of cycle composites I mentioned earlier, up and down cycle composites. Typically the bottom cycle composites are responsible for bottoms, and up composites are responsible for the tops. And you can see that very clearly on the chart how that happens. So our software is able to scan the chart, the data, calculated in three-dimensional space, and then identify these variables. The lines you see on the chart is our cycle clusters. Cycle clusters, once again, very quickly, we have proprietary cycles that we develop over the years that are very accurate, and what the software does, it scans the chart, identifies those turning points, identifies those cycles, and projects them into the future. And what we found over the years is that the important turning points occur not when any particular individual cycle arrives, but when there's a multitude of cycles arriving at the same time. So when we have 3, 4, 5, 6, 7 cycles arriving at the same time, the more the better. The more powerful cycles they are, the better. And when we have such a cluster, it is nearly assured that we're going to have a significant turning point here. So what we're looking for this major cycle bottom for BBVI, and then we the software is projecting an increase into this area, which is November of 2027. So the bottom right now, or the bottom that we just had in BBVI at $25, we made very accurate projections. I believe we took a long position at 25.50. It bottomed at 24.94 or something like that. So incredibly accurate hit so far, and then it surged higher thereafter, as you know. So you can check that stock out. But basically, that's what allows us to make the projections. It allows us the time variables line up with this particular bottom. It is a very clear bottom from both perspectives, the clusters and this cycle composites. And then it's projecting a significant move higher into this area of 2027. Let me show you the price variables and how we look at it as well. I believe it is right here, and this is Lululemon. Lululemon is trading or tracing into the bottom. So the factor I wanted to show you here for BBVI is how far it's going to increase. So these are the mathematical projections that I talked about, calculating market in three-dimensional space. So we've identified the bottom here, and then it's projecting that it's going to increase to here, at least $120 a share. So from $25 a share to $120 a share within a 2-year period of time. That's a pretty good return in my on investment in my book, and the risk, of course, is minimized. And if everything goes well, then as you can imagine, it's a huge win. Now, Lulu is a very similar situation. The only difference is that Lulu hasn't bottomed yet. It is tracing into its bottom, and it should bottom within within a couple of weeks. And I wanted to show you the upside projections once the bottom is reached. Actually, there's a small possibility it has already bottomed, and that's one of the reasons in our own service we issued a possibility for a technical entry, meaning that if no new bottom is reached and it begins to increase, triggering some of the technical parameters, then we're going to be able to take a long position. But essentially, it's the very same forecast. It is bottoming here and then increasing into, let's see, at least $650. So from 200 to 600. You do the math, pretty good in my book once again. And the period of time associated with it should be even shorter. So let me go back to the timing variable for Lulu, and so you can see a little bit better. So it is bottoming in right here. It is identifying as August 1st for the cycle composites, and I believe one of our cycle clusters arrives around August 15th. So within that time frame, we expect the bottom. I believe, if I'm speaking from memory, it's at $225 a share, plus or minus $5 a share. I might have to correct myself. I have so many numbers in my head. It's rather not funny, but I believe it's $225 plus or minus $5. So our trade will be triggered there, or based on the technical indicator, if the new bottom is not reached and we have a double bottom formation, then subsequently begin to increase. And the rally here should be quite sharp, because it should increase into this top formation, which is scheduled for December of 2025. Probably will extend into 2026 a little bit, but this is the point I'm trying to make here. That's how we are able to make these kind of projections. Let me go up to the chart again. So we're able to make these projections with a very small margin of error. We're able to identify that particular bottom on, for example, on both BBVI and Lulu. And then from there, we are able to calculate what the next move is going to be and how long it's going to take. And then, of course, we're only pulling in the best opportunities that are available for us. So out of the entire S&P 500, let's say before the end of the year, there's going to be 100 stocks that will increase some sort of a move that is 50% or higher. So we're able, at least from those 100 stocks, dismiss obviously the short opportunities, unless that is something that you're looking for. Let's say 20 of them out, and we have 80, and on the worst case scenario, half of them are not very good once we do hands-on analysis, but that leaves us with at least 40 opportunities of out of the entire S&P 500 that have the ability to increase quite substantially within a relatively short period of time. And of course, the risk profile of these opportunities is quite low. So once again, we have more opportunities than we know what to do with at this point in time. If you would be interested in working with us and having access to these opportunities, I do encourage you to contact us, and I can walk you through all of this in much greater detail. So thank you very much for your time. Once again, if you have any questions, if you have any suggestions, if you would be interested in working with us on this, I do encourage you to contact us, and there will be links at the bottom of the video how you can do that. So that's it. Thank you very much for your time. We'll be back. We do post daily analysis for various stocks, but in this particular for this particular case, that's the end of the video, and you guys have a wonderful day ahead. Bye bye.